Hello everyone, how are you? I'm Dr. Labis from Dr. Labis Academy. Welcome you all. Today we are going to have ACCA UK taxation, is it right? Our Financial Act 2022. This is valid till March 2024 exams. Okay. This is the Kaplan I'm using. In continuation with the previous sessions. Okay, this is the series is 13. I kindly request you all, please subscribe to my channel, share this channel, watch till the end, and any comments, post the comments, and if you find it really worthy, please like the channel. Okay, please subscribe to my channel and watch till the end. Okay, this is regarding the things with respect to Financial Act 2022, and this is valid till March 2024 exams. Very important, very clear. Okay, so that you will have people who are writing examinations, they should be aware about this. Fine. Coming back to this, they are talking, this is the Kaplan. Okay, please subscribe to my channel, share this channel, and watch till the end. First we will see what is the scenario. Tom died on 1st of May 2022. He made a gift with a chargeable amount of how much? 450,000 after all available exemptions to a trust. This is very important. Okay, to the trust on when it has been given on to 2016, means 2016, from 2016 is 17, 18, 19, 20, 21, 22, is it right? 22 means 22 means 6 plus years. Okay, 6 plus years. Tom paid the inheritance tax arising on the gift. This was Tom's only gift. Tom estate at the date of death includes the following assets as well as some cash in the bank. Okay, a 50% share of how much? 150,000 of successful race horse. Okay, a 50% valued of how? 150. Very clear. We have to be very clear with respect to computation of gains. Okay, computation of gains and taxable, which one is exempted, which is not exempted, which is exempted and which is not exempted on death. Okay, on death, that's the point we should be very clear, is that there are something so there are something on the death estate, is it right? It's not exempted for inheritance tax. Okay, therefore you have to be very clear. In the examination they will mention you these types of points, whether you have we have the complete understanding about the which one are exempted and which one is not exempted, which one is not exempted in inheritance tax, and which one is exempted with respect to what? With respect to capital gains. Okay, computation of gains, that we will cover in detail. You have the cash winnings of how much? 40,000. A main residence valued how much? 875, which has an outstanding payment mortgage is how much? 500,000. How much is the main residence? 875. See, any debt is existing, any debt existing, is that any debt existing on the property should be deducted. Okay, any debt existing should be deducted. Okay, means 875 minus 500. The executors have determined that Tom chargeable asset for IHT purpose is how much? 2 million. And they filed their account of estate assets with HMRC revenue. HMRC is on 3rd of January 2003. Okay, we will see how they are going to interpret and how they are going to ask questions on that. Tom left all of his assets to his children. His wife is still alive. Okay, they have given it for, he has given it for whom? He has given it for his children. When he has given it for children, definitely what will happen? Additional residence nil rate band is available. Okay, if Tom is leaving his main residence to his children, therefore what will happen? The additional residence nil rate band, how much? 175,000 pounds is right, is available, and it can be deducted from the estate. Okay, it can be deducted from the estate from 2 million amount. Okay, Tom left all his estate to children. His wife is still alive. The nil rate band is how much? The nil rate band is 325. But very small, very crisp. Okay, what is the gross chargeable amount for the purpose of calculating any additional tax on Tom's death when it has been happened? 2022. Isn't it? 2022 means it is almost less than it is 6+ years. 6+ years. In respect of Tom gift of how much? 450,000 to the trust. Is that? Who we have to make sure who is paying the tax. If trustee is paying, is it right? If the trustee is paying, is it right? If trustee is paying, it is how much? 20%. If donor is paying, is that? It is 25%. Fine. If donor is paying, it is 25%. That's what it says. Okay. Now, what is the gross chargeable amount after all the deduction? For the purpose of calculating additional tax, in respect of the Tom gift of how much? Tom gift is 450,000 pounds. Okay. First, we will work on this here. Okay. Step by step we will take. Is that? We will make it that chargeable amount. Is that? Chargeable amount. Is that? Chargeable amount after all exemptions. Okay. Chargeable amount after all exemption. This is related to inheritance tax. Okay. Chargeable amount after all inheritance. How much is the? They say Tom gift is how much? They have mentioned here also. Fine. They have mentioned he made a gift with a chargeable transfer of how much? After all available exemptions. It comes to how much? It comes to 450. Okay. Now, nil rate band. Okay. Nil rate band or date of gift. At date of gift. Okay. He made a gift with chargeable amount to a trust. On 20th, paid the inheritance tax, arranging the things. The executors have demanded that the Tom chargeable estate is 2 million. Okay. The nil rate band for the tax year 2015 and 16. Is it right? It has been given here. The nil rate band for the tax year 2015 and 16. Nil rate band on the date of gift 2015 and 16. Okay. It is how much? It is 325. Okay. It is how much? It is 325. Next, we have to take a gross chargeable transfer. It is less than, if it is less than 7 years before the date of gift, you will have, if it is less than 7 years, is it right? Before gift. Is that before gift? It is not applicable. Is it at 0? How much we'll have? You have a deduction of how much? 325. Okay. You have deduction of how much? 325. The balance is 450 minus 325. It comes to how much? It comes to 125. This is going to be identified as a taxable amount. Okay. This is tax because it is by the donor. Is it right? Here it is by the donor. IHT payable will be how much? IHT payable is taxable amount. Is it right? Taxable amount times how much? 25%. 120 125 times 25. Okay, how much is there? Taxable amount is how much? At the rate tax is nothing but taxable amount times 25%. Why it is 25%? Because if donor is paying, it has to be at the how much? 20 by 80. Is it right? 20 by 80, 1 by 4, or 25%. How much we will get? Equal 125 times 25%. It comes to how much? 31,250. Is it right? Now gross chargeable transfer, is it right, is equal to what? Chargeable amount, is it right? Chargeable amount is how much? 450. Okay, chargeable amount is how much? 450. Now IHT payable is how much? IHT payable we have calculated, is right? IHT payable is how much? 31,250. The amount is how much? 481,250. Answer is 481,250. Okay. If Tom also has made cash gift 5,500 to his daughter and 400 to his granddaughter on December 14, what would be amount of annual exemptions available on the gift on the trust on 2016? Is it right? See, when they have dates are very important, is it right? Dates, put one dash here, is it? Put one dash here. What is the, is it? They say that cash gift is the cash gifts that has been happened in the year 2014 comes under potential exempt transfers. Okay, whereas in the year 2016 it will come in chargeable lifetime transfers. Okay, fine. 2016 CLT. Okay, this is when this is what we did 20th December 2014. Okay, this is 20th February 2016. What is the annual exemption amount? Annual exemption amount is 3,000. Annual exemption. Okay, first you have to use for the current year. If the previous year, first for the current year, then if the balance is available for the previous year, then we have to use it for the previous year. Okay, that is the rule. Now what is the transfer in value? Transfer in value will be how much? Transfer in value is 5,500 plus 400. It comes to how much? 5,900. Okay, less annual exemptions. Okay, less annual exemptions current year, is that 2014, 2015. How much is 3,000? Okay, next, how much is balance? 2,900. Okay, you have annual exemption of previous year 3,000, but how much we need? 2013, 2014. We can use how much? We can use 2,900. Okay, next we have to take it for 2016. Is it right? What they are asking us? They are asking that what is the amount of annual exemption available on the gift into the trust on, see, annual less annual exemption. They have not used any annual exemptions. Is that 2015, 2016? How much is there? 3,000. Okay, and is that 3,000? Okay, and with respect to 2014 and 15 already used. Okay, already they have used here. Is it right? Already they have used here. means on 2014 and 15 we'll get, see, for this they will judge for this. Well, why, what we people will do, we'll do again, we'll deduct 2004. No, once already deducted, again we should not deduct. Okay, again we should not deduct. What is the amount? Amount is 3000. We can carry forward the unused exemption only unused. Okay, unused exemptions only for 1 year. Okay, previous year unused exemptions. Make it very clear on this. Okay, make it very clear. Now what they say, IHT in respect of the gift to the trust 2016, is it right? What rate of taper relief is applied to the things? How many years has been passed? Make it point 20 to 2016. Okay, from where we have to make it sure what is the what our rate of taper release is applied. Is it right? When he died on 1st May 2022. Is it right? He died on 1st May 2022. How many years are there? It is 16, 17, 18, 19, 20, 21, 22. It is more than 6 years. Is it right? More than 6 years. If it is more than 6 years, how much payable by the whom? Payable by the trustees. Okay, payable by the trustees is how much? If you take into consideration how much you are going to pay, you are going to pay 80%. Okay, if you see the table, it has been clearly given. Okay, now what is the net value? Is that what is the net value of the estates 1 and 3 which are included in term chargeable estate of IHT purpose? See, when you are doing this, okay, when you are doing this, be very clear. What it says, computation of, is it? You check this chapter, computation of gains and tax payable. Okay, computation of, see, in there is an exemption. Okay, in there is an exemption. Fine, in there is an exemption. But whereas in this case it's no exemptions. Okay, because what it says, see, as per the thing, the gambling winnings, okay, vesting chattels are exempt assets for the purpose of capital gains. For the purpose of capital gains, that those are exemptions. Okay, they will ask you in term, it is common for this type of to be included in death assets. Is it? In the examination they will test you whether it has, you have the understanding or not. But what happens, as per the inheritance tax, there are no exempt assets. Okay, there are no exempt assets. How much is the 50% of the to be included in total chargeable death estate? It is death estate. Okay, 150,000. It is, we have to, net value is how much? 150,000. It is chargeable. Okay, chargeable death estate for IHT purpose. The second thing, how much they say? They are saying it is 40. You see, if it is cash winning from betting also, if it is capital gain, is it? If it is capital gain for charge computation of gains, then fine. But here there is no exemptions. Is that 40,000? 40,000. Fine. Next means you 40,000, 150,000. Okay, potential answers. Next, main residence. How much the value of the main residence? The value of main residence is 875. And how much is the debt on that main residence? 500. Net value is going to be how much? 375. Is it right? Net value is how much? 375. Okay, this is for the first one. This is for the first one, this is for the second one, and this is for the third one. How much IHT payable sum on death estate? Is it? How much is the estate of the Tom? They have mentioned here. Is it? Here they have mentioned how much is there. The estate is 2 million. Okay, the estate is 2 million. In this 2 million, we have to identify how it is applicable. Okay, how it is applicable. See, what is the value of the estate? Value of the estate is how much? Value of the estate is 2 million. Okay, value of the estate is 2 million. How much is the nil rate band available? Is it the nil rate band is how much available? Nil rate band is how much available? As per the things, it is 175. Okay, 175. Okay. Apart from that, you have NRB. Is it right? NRB at death. Is it right? They have mentioned here NRB at death. Is it right? See the things. What they have mentioned? They have mentioned nil rate band. Okay. Nil rate band at death is how much? 325. Okay. Then for 215/16. Okay. 215. How much is there? 325. Is it right? 325. Now, is it? No. What happened? There is no. The gross chargeable transfer is how much? Gross chargeable transfer at the time of death. Is it? There is a gross chargeable transfer is how much? It is no. We don't at 20th February 2016. Okay. 20th February 2016. The nil rate band is how much? 325. The executors have this one. Okay. The executors have determined that Tom chargeable estate is, and they have filed the account of estate assets with HMR on 3rd January. Is it right? And they have taken all the exemptions. Fine. Next. See, what is how much is the gross chargeable transfer, where it has been given? Yes. Is it? Minus, is it? Minus gross chargeable transfers. In previous years, how much? In previous 7 years. Is that? In previous 7 years. Is that? Is previous 7 years is greater than 325. What is the reason? Is it right? What is the reason? Which is within the 7 years before the death. Is it right? Within 7 years before the death as such. Because of within the 7 years before the death, how much you have to take? We have to take 325. Okay, we have to take. If that is the case, NRB available, nil rate band available will be how much? Nil rate band available is 0. Now, if you take this into consideration, we will calculate what? We will calculate the taxable amount. How much is the taxable amount? 2 million minus 175 is 0005281. Okay, 185. What is the inheritance tax payable? What is the rate? At what rate we are paying? We are paying at the rate of 40%. Okay, 40% on 1825. Okay, 1825. It comes to how much? 1825. Is it right? 1825 times 40%. It comes to 730,000. Answer is fine. In this way, we have, this is section B, scenario based. This is a scenario based question which is going to make sense for that. Okay, next. Okay. Now, continuation to this. Okay, continuation to this. We will do another one. Okay, we will do another one. Afiya died when she died on 29th November 22. She made number of gifts during her lifetime as follows. Afiya's first gift was made when 14th September. She gave 6,500 ordinary shares, quoted company, is an unquoted investment company, to her daughter. Before the transfer, Afiya owned 8,000 shares. See, what we have to do, we have to take into consideration what is the value of shares held before and what is the value of the shares held after. The difference is transfer in value. Once we get the transfer in value, then we have to take annual exemption, 3,000. Current year, if available, previous year, 3,000. Okay, that is the annual exemptions. They have of Cashaway issued share capital of 10,000 shares. On 14 September, Cashaway Limited shares are how much? Worth 3 for each holding of 15% 3, 65% 7, and 80% how much? 80% will be 8. Okay, 80%. How much is there? They are transferring how many shares? 8,000 shares. 8,000 shares is, it comes to 80%. At the rate of how much? At the rate of 8. Okay, at the rate of 8. And what is the balance is there? Balance is going to be 20%. Is it worth the share on 14 September? Cashaway Limited shares were worth 3 each for a holding of 15%. Okay, each of the holding of 15%. How much they have said? They have transferred 8,000. Okay, they have transferred 8,000. See, sorry, the total number of shares are how much? Total number of shares are 8,000. This is 80. This is 80% of total shares. Is it right? 80% of the shares. And balance, how much? Balance is how much? Balance is 1,000. How much they have transferred? They have transferred 66,500, and the balance is how much? 1,500. This constitute how much? 15%. If this constitute 15%, what we have to do? We have to take, what is the value of 15%? 3. Is it right? What is the value of 15%? 3. And what is the value of 80%? What is the value of 80%? 80% value is 8. Okay, 80% value is 8. Fine. This is the first point. Okay, this is the first point. Second point, what it says, Afiya then made various other gifts such that at 26 January 22, the total gross chargeable transfer of all transfer made in previous years are how much? 220, comprising pure potential exempt of 100,000 and chargeable life transfers of 120. We will see wherever it is applicable. On 27th January 2022, she died on 29th November. Okay, she died on 29th November. Is it right? She died when? She died on 29th November. When she is making gift, one is on 26th January, the second one is 27th January. Okay, the one she has made on 14th of September. Fine. Dates are very, very important. Okay, dates are very important. They have made a transfer of after how much? 400,000 to a trust. Afiya paid the inheritance tax from this gift. Afiya's husband died on when? June 2008. Long back. Okay, long back. And leaving an estate value of 200, he left Is that estate value is 200. He left 46,800 to his daughter and the balance to Afiya. He has never made any gift during their lifetime. Is it a 200,000 value, 46,800 to his daughter, and on her death, Afiya left an estate of how much? 525. There are so many things are included here. Is that very slowly? First, you have to understand, including her main residence worth how much? To 375. Okay. The nil red band is how much? 312, and it is 325 thereafter. Fine. Now, what they are asking us, what is the gross chargeable transfer value after all exemptions of Afiya gift as on 14th September 2017. Okay, 14th September 2017. Gross, that means, fine, we will write, we'll do here. Is it? We'll do here. Now, this is the one, okay. How much is that? They are talking about what? 14th September 2017. Is it? Potential exempt transfers. Here, what is the value of the shares? Value of the shares before the transfer. Is it right? 80%. Okay, 8,000. It is 80% of total shares. Is it right? If it is 80%, value will be how much? Value will be 8. Okay, it comes to how much? 64,000. Okay, 64,000. Well, how much is left over? 15%. Is it right? Value of shares. Value of shares. Is it right? Held after transfer. Held after transfer. Is it right? How much is there? 1,500. It is equal to 15%. At the rate of 3, it comes to how much? 4,500. It comes to 59,500. Okay, it comes to, this is the transfer. This is the transfer of value. Is it? This is the transfer of value. Now you have to deduct less annual exemptions. Is it right? Less annual exemption. First you have to take annual exemption for the current year. How much? 3,000. Then you have to take, if they have not done anything, is it right? Then you have to take annual exemptions of the previous year, if available. Otherwise, no. Okay, 3, it comes to 6,000. It means 53,500. Is it right? 53,500. It is called as a gross chargeable transfer. What they are asking, how much they will ask? That was a gross transfer value. How much is there? 53,500. Fine. Okay. Now, fine. Put one dash here. Okay. Put one dash. Fine. Next. This is point number 2. Okay. This is question number 2. How much IHT available on the gift of the trust on 27th January? Is it right? 20 chargeable lifetime transfer. 27th January 2022. Okay. Now, how much is the gift to the trust? How much they gave gift to the trust? First is, see, on Afiya made on January 27th, 2022. They are asking the same thing now. They are asking what is the January, this one. Okay. This is related to this one. Okay. On January 27 January, Afiya made a transfer of value After all exemptions, how much? 400,000 to the trust. Afiya paid the inheritance tax from this gift. Afiya husband died on when? He has died on 2000, leaving an estate of how much? Leaving an estate of leaving an estate of 200,000. See, he left 460 to his daughter. See, before that, what happens? Afiya then made various gifts such that 26 January, the total gross point number 2, chargeable value of all transfer made in previous year was 220, comprising potential exempt transfers of 100 and chargeable life transfers of how much? 120. Means they have used this much amount. Is it right? How much is the value of transfer? The value of transfer is 400,000. Okay, the value of the transfer is 400,000. Now, how much after the 1 minute? Here I will write here transfer in of value. Okay, transfer of value. How much? It is 400,000. Okay, now less. Is it right? How much is the NRB is there? Nil rate band at date of gift. How much is the available? It is going to be 325. But how much they have used? They said that they have used chargeable lifetime transfers. Is it right? Gross chargeable lifetime transfers. Okay. How much they say in the last 7 years? In last 7 years, how much they have used? They have used 120. Okay, they have used how much? 120. If they have used 120, how much is the balance left over? 120 minus 325. It comes to how much? 205. Okay, this one they have already used. Is that balance? We have to 205 is available. How much it will come? It will come to 195. Okay, this is the taxable amount. Is it right? This is the taxable amount. Now, how much it is the donor is paying? Is it right? It is donor is paying lifetime IHT. Is that lifetime inheritance tax? Is it right? It is who is paying? You have to mention donors. Okay, donor is paying. Is it right? When donor is paying, it will be at the rate of 25%. 20 by 80. Okay, 20 by 80, 195. Okay, 20 by 80, 195. How much you will get? 195 times 25%. How much it get? 48,750. Is it? How much you will get? 48,750. Are you clear about this? Okay, very simple. Okay, 400,000 is the transfer in value. How much is the available? That much available you have to deduct, and subsequently we have to whatever the amount is available. See, if the trustee is paying, it is 20%. If the donor is paying, it is 25%. Okay, this is where the difference will lie. Now, which 4 of the items will be included or deducted in Afiya chargeable death estate for inheritance tax purposes? Is it right? Included in or deducted from. Okay. Now, when we are doing this, what we are including in and we are deducting from our chargeable asset, we include what? We include main residence. Is it right? Is it? Yeah, we include what? We include in or deducted from. Okay. include in or deducted. We will include main residence. We will deduct funeral expenses. Okay, we will deduct funeral expenses. Is it right? Now, annual exemptions, is it right? Annual exemptions will not be is only available from lifetime gifts. Okay, it is only available for deduction. Okay, only available for deduction for lifetime gifts. Okay, lifetime gifts. That's very simple. Okay, in the calculation of it, we cannot deduct from that. It cannot be deducted from. It cannot be deducted from the death estate. Okay, death estate. Fine. Now, 1 and 2. Okay, the shares held for an individual. Okay, share held for an individual in life savings. See, individual life savings are deducted. How much? To the extent of 20,000. Okay, is right? It should be deducted. Now, when it is again, is it right? Guild in the guilds, it is also going to have it. We have deducted. 500 owned to the friend. There is nothing. Is that? Is it right? Verbal arrangement. Okay, verbal arrangement is not deductible. Verbal agreement, it should be in return. Okay, it should be written. Answer is what? A, B, D and E. Okay, what is the total amount of NRB that Afiya could claim in respect of unused NRB of death of her husband? Is it the how much you have to, you can claim? What is the NRB at death? That's very important. Okay, what is the NRB at death? The NRB at death is how much? See the thing. When the husband died, Afiya husband died on when? 1st June. Okay, and what is the NRB on 1st June? 312. Okay, what is the NRB on 1st June? 312. Fine. How much he has given to his daughter? 46,800. Okay, 46,800. Now, that happens when 2008 2009. Okay, that happens when 2008 and 2009. Little bit complicated. Understand my point? Make it a point. It is very complicated. Is that husband's death estate? Okay, husband death estate. Very careful you have to do. What is the NRB at death? Is it right? Which year it is? It is in the year 2008 and 2009. Okay, 2008 and 2009. How much is there? 312. Fine, 312. How much chargeable estate to daughter? Chargeable estate to daughter. How much? How much he gave? He gave. It is been given. It is right. How much is there? Chargeable estate is how much? 46,800. Okay, 46,800. How much is unused? 265,200. Okay, this is unused NRB available for transfer. Okay, available for transfer. Now actually the things will start. Is it? Now, how much they have percentage of NRB at death? Percentage of NRB at death. At death, how much is there? See, 265. Okay, how much has been Available is 312, is it right? Times 100. It means percentage of percentage of NRB at death. It comes to how much? 85%. Okay, means 85% is available, unused. Okay, 85%. Now, what is the available NRB as on date? Available NRB, is it right? Available NRB is how much? 325. Okay, 325 times 85% only they can use. Is it? They can use how much the Afiya can use? Afiya can claim only 85% of 325. It comes to how much? 276, 250. Is it? Next, you have the unused resident nil rate band. Is it right? You have unused residence nil rate band. Is it right? That is how much is there? I think it has been given. Is it right? They have given somewhere. The unused nil rate band is how much? No, it has been given in the. They can use it. Is it right? How much is there? 175. If you take the total, is it right? 250, 154. Okay. This is what? This is the Afiya can claim. Okay, could claim of death on the husband. How much is there? 451, 250. Fine. Now, last one. For both the lifetime transfer, for both lifetime inheritance tax on the gift to the trust on 27th January and tax arising on the Afiya said date, you select the due date payment. Is it right? Lifetime tax on gift. Okay. Lifetime tax on gift. When they have made on 27th January. Is it right? They have made on 27th January. If they have made on 27th January, is it right? 27th January. See, 27th January, is that end of the month is how much? 31st January. From 31st January, add 6 months. Is that? Add 6 months. It comes to how much? It comes to 31st of July. 31st of July 2022. What is the rule? Rule says that whenever they have given the due date of lifetime tax on gift will be being the 6 months from the date end of the month. Okay, January means you should start from 31st January or 1st February. From that day to 6 months you have to do. It comes to how much? 31st of July. Tax on estate. Okay, tax on estate. When Afiya died, on her death, Afiya husband has died. When Afiya has died, Afiya died on 29th November. Okay, when they have died on 29th November, is that 29th November? Leave November. Start from December. Okay, December from December to next 6 months. Okay, December, January, February, March, April, May. Okay. For the next 6 months. Okay, means till when? Till 31st of May 2023. Okay, 31st of May. We make it a point in the examination. They will ask you this. Is it? They will ask you this. 31st of May 2023. Okay. With this, we have done 2 questions. Related to what? Related to the inheritance tax. Is that we covered most of the parts. Still, the more you do, the more the clarity will be there. Okay, please subscribe to my channel, see the channel till the end, post your comments, and anything is there, please let me know. Your feedback is very important. If you find it really worthy, please like the channel. Okay, thank you so much.